Larger idea, Jason, is that in capitalism, when you over-earn for enough of a period, competitors decide to try to compete away your earnings. We have discussed this a lot. When there is no monopoly, your time usually seems to be limited and decreases. In the case of a monopoly, for instance, take Google, you can over-earn for decades. And someone trying to replace you takes quite a very long time. That is only beginning to show up in things like uncertainty and other services erasing the Google monopoly. All of these extra revenues are eventually competed away though, at some point. Regarding Nvidia, what you are currently observing is their over-earn in a really huge scale. The real question then is, who will volunteer to attempt to compete, away from profits? According to the old Bezos quotation, "Your margin presents my opportunity." And I think we're starting to see, and you mentioned Grok, who had a really viral moment I guess this week, but you're starting to see the emergence of a more deep knowledge of what this market really means. And the economics of it are simply getting recognized to now more and more people. Who will therefore compete away the inference market? Who will compete away the training market? There are too many options here. How can you feel safe? I fear you are missing the Monsanto. I want to link it. Keeping Friedberg's point in mind, all of this expenditure must so eventually turn a profit, right? Otherwise you will appear quite stupid for having spent $20 and $30 and $40 billion. So, Nick, if you simply return to the Nvidia revenue slide, I can try to frame this at least the way I think about it. Therefore, if you consider what you are talking about, that is, who is going to spend $22 billion, $100 million? Look, who is going to do it? Well, Jason, you stated it. All of this is related to technology since they have idle balance sheet money. But their investors will want a rate of return on that when you spend $22 billion. Therefore, consider what an acceptable rate of return is, call it 30, 40, 50%, then factor in and that represents profit. Then you consider all the other things that must support that. $22 billion of expenditure must yield most likely $45 billion of it. And so Jason, the question to your point and Friedberg's point, the $64,000 question is, who in this last quarter is going to make $45 billion on that $22 billion of spends? Once more, what I would advise you to be truly honest about is that what you are seeing is more about large corporations pushing people around with their balance sheet and able to visit Nvidia and declare, I will provide committed pre-purchases over the next 3 or 4 quarters. And less about here is a product I'm shipping that really generates income, for which I absolutely require far more computational resources. This is not the latter. Run, as proofs of concept and demos, most of the apps we are seeing in AI today are toy apps housed in a sandbox. That is not production code. We rebuilt the whole Boeing autopilot system and today it runs with bots and agents, using all of this training. That is not the reality here. Thus this is a quite relevant issue. The demand is evident today. These are the big folks with enormous amounts of money. And since Nvidia can now project demand for the next 2 or 3 quarters, they are quite clever to seize it. We still need to observe the next great event, in my opinion. Looking back also reveals what the past has shown us. The large players hardly create the innovative ideas that generate enormous profits. These are the new people that come up with something quite genuine and fresh, as they have to be somewhat more diligent and lack a lot of money. Indeed, great art results from restraint. Alright, as yet we have not seen that. For Nvidia, I so believe the revenue scale will remain similar for like 2 or 3 years most likely. What is the terminal value though is the true concern. And Zach exhibited in that Cisco slide exactly this as well. People finally understood that the application layer, other areas of the stack, would be receiving the value, and less income multiple and credit was granted Cisco as more and more money was accrued at the application level of the internet. And that is nothing against Cisco since their income kept growing, correct? They did an amazing job too, but the valuation suffered. 153, look at the chart, it shows 153.13 background, 130. It's come down somewhat, and is now beginning to solidify here around $137. Now, this morning, it's almost trading 139, up a whole %. What thus should we investigate at Nvidia? This company is still one whose AI-driven expansion is unparalleled among others. Since nobody seems to be able to close the gap, it's almost as if monopolies' murmurs permeate all around. But client needs are changing and regulatory issues are just around the bend. What will the future hold? Nvidia is in what inning? Nvidia has stalled here due to all the questions around it, like we discuss with Tesla. What is the next thing? Something related to a video we are not even aware of yet. Right, we know Blackwell has a chip behind her. We so want to trade this in really straightforward manner. We are going to buy the 139 call, kind of at the money call, give ourselves some time, go out to February 14th, buy the long call diagonal, and sell the January 24th 144 call this week. Exactly, buy the at the money, around 1 month out sell, look at the predicted move, which for this week is roughly $4.50, $4.30 to be exact, and sell that short call whenever the equities trade, make that your long call diagonal. That's our current Nvidia look. You currently have roughly 37 long deltas. Every day it is gathering theta. That figure will increase and you are aiming for a movement upward near the 144 strike. Now if it gets up there, keep in mind that we record $5.30 in expenses, right now, trading for roughly $5.20. You should exercise some caution as that exceeds the width of the strike. Should it get up toward that short strike, you either want to close the trade, or change your strikes. Make sure you so grasp call diagonal, the risk hence is the salary scale. Whatever the debit is, you run danger on the trade. You are so seeking a movement from where it is today towards the 144 strike in Nvidia. As indicated, roughly 37 deltas every trade. Alright, today our trades are those ones. Ahead of their earnings and with their exaggerated implied volatility, Netflix's short iron condor is but one with a little attitude, yielding a small bit lengthy delta, and subsequently a long call diagonal in Nvidia. Our show today is the one that relates just to Daily Trader. I'm Kevin Hicks. We shall see you tomorrow with another Daily Trader episode. Although we have gone very far already, especially in some sectors and so on, the most impact will be what I am talking about, since, right, if you have those multiples and interest rates rise, therefore, alright, you are going to pop. Thus, while we concentrate on the deficit question, indeed it is fragment. Of course it is driven by the industries that are outstanding, the disruptors, the artificial intelligence and so on. I doubt it has been brought down to the applications of artificial intelligence. Stated differently, the applications for artificial intelligence. Therefore, if you are observing from around the globe and find it really fascinating what is happening in China with artificial intelligence, in terms of applications, other countries, AI's uses are underestimated, I believe. And subsequently, of course, what is the multiple? The multiple expands on the interest rate,